Johnny baby.
What the f is that hat on your head?
For the culture.
It's for the culture, okay.
You don't like it? You like to do better?
I like to do better.
Hey everybody, JC Parets here, founder of AllStarCharts.com, and I am joined once again by my esteemed colleague, Mr. Sean McLaughlin. What's up, Shawnee?
And you make me sound so fancy.
You are fancy. You know, you, my friend, are a man of many talents. You're on stage these days and not talking about options, but doing a little acting. You are an actor.
Yeah, we got another show coming up that first Friday in August.
You know, you're a hiking aficionado. So many skills, Sean. So many skills.
So many skills. The skills to pay the bills.
You'll win an Aaron Rodgers lookalike contest every time. I mean, just one after the other. Just nailing life. Crushing it.
That's my brother, Aaron Rodgers.
All right. So we have a very interesting trade today. Volatility's relatively elevated, not what it was, but still when you zoom out, volatility is elevated. So it seems to pay better, according to history and basic arithmetic, to be on the selling side of options, selling premium. And we're looking at General Mills here. We're looking at a stock, General Mills, consumer staple, breaking out of a monster base rather than buying the stock or buying the calls. Sell the puts, sell them naked.
Yeah, look, I wrote in the blog post this morning about General Mills that if you are a stock investor and you are long-term minded, I think beginning to build a position in General Mills here makes sense as a stock trader. I think this is, a long-term hold, something that you do well. It's a nice steady dividend payer. What's not to like, especially when it's breaking out of multi-year highs. But us, or me particularly as an options trader, I'm kind of keying in on something a little bit more tactical here. The breakout that just happened, we broke out above 74, which was a key breakout, multi-year breakout that you can clearly see in this chart here that JC is showing us. And then we've had a nice little pullback in the last week. It's kind of, there you go. That'll zoom in a little better. Had a nice little pullback this week that I feel like gives us a nice opportunity to get in here at better prices. Now, when me and Straza and you were first talking about this trade, my original thought was, we should buy some out of the money calls. But Straza said something that really kind of stuck with me. And he was like, you could buy these out of the money calls, but it's a slow mover. You're going to need time. And as that kind of percolated in my brain, I'm like, you know what? I don't know if I want to be in this for a long time. This feels a lot more tactical. And the options premiums were still pretty elevated right now, off of the highs, of course, especially since we had earnings about a week and a half ago, but still pretty elevated. And with elevated premiums and just like a tactical bounce here that I think we may have, it just kind of made sense for us to sell puts and just go for a quick hit and try to score some of that cha-cha, as you like to say.
Oh, a little cha-cha. Let's talk about the actual procedures. All right, so you sell the puts, collect the cha-cha, then what? Where are we taking profits? Where do we admit we're wrong if we're wrong and move on? Let's talk about that, right? Because it's easy. Okay, volatility's high, stock's doing great, sell the puts and shut up. Great,
yeah,
fine. Like, I get that part. Okay, fine. Now we're in the trade. What do you think the mindset needs to be for both taking profits and risk management?
All very important questions. Number one, this is not a, put the trade on and forget about it type of trade. When you're holding naked puts, you are exposed theoretically to the potential of unlimited risk. Now, of course, the stock can only go to zero, we think. And so that's where our losses could stop. But for all intents and purposes, it's theoretically unlimited risk. So with that said, we have to have a stop loss level in place where we will get out of this trade no matter what. And for us, that level is 72. All right, 72 is kind of in the middle of the upper resistance zone from from April and May. And that just feels like a nice spot that gives us a little bit of room from here. But if it were to break 72, then that would definitely be confirmation to me that we're either early or wrong in this trade, and I will want out. So 72 is the level we're looking at. Now, on the flip side, JC, we're not just going to hold this thing if it's working. We're not going to just hold it all the way to expiration. There are some people that like to do that kind of thing. But for me, if I'm holding short puts or short anything, and we're getting closer and closer to expiration, and there's only 10, 15, 20 cents left of premium in that trade, why am I holding out an extra week or so to earn an extra dime when I'm still holding all of the potential risk if we have a market reversal? I don't like that math. I don't like those odds. So when I'm holding naked puts, when I sell naked puts, I like to buy them back when I can buy them back for half of what I sold them for. So in this case, I sold them for $1.85 this morning. I think you could still get about $1.85 for them right now. We'll look to buy them back for 90 cents, which is a little less than half of what we collected today.
All right. So we are selling the GIS. This is General Mills GIS, selling the GIS September 7250 puts for approximately $1.85. And we're going to cover when we can get half that. Right. So 90 cents ish.
90 cents. That's where I like to get out. I got a resting order, good till cancel limit order, just sitting out there waiting to get hit.
Hopefully we're out before the preseason, right? Are you going to watch any preseason games, or do you boycott the whole thing?
It's funny you ask that, because my son, who'll be 8 years old this week, he gets very excited about preseason football. He can't wait. He's got the schedule up. He's ready to watch all the games. And I keep telling him, Emerson, that's his name. Who cares? It doesn't matter. And then I tell him the story. JC, you might appreciate this. Back when the Buffalo Bills, my team, went to 4 straight Super Bowls. I like to call them 4 straight AFC champs. We'll just call it that. 4 straight years.
4 Super Bowl losers.
Shut up. Anyway, in those 4 years, the Bills were the winningest team in the NFL. There's no arguing that. Okay, the winningest team in the NFL for 4 years. But during those 4 years in the preseason, they were 0-16. So I like to tell my son that story, that the preseason doesn't matter.
When the Miami Dolphins went undefeated in 1972, they went 2-4 in the preseason.
They played 6 preseason games?
They used to play 6 back in the day, and they all started getting hurt, so they started playing less.
Wow,
but tell Emerson that I appreciate his enthusiasm. And also, the preseason is a great way to check out your new players, because a lot of our teams have new players that you want to check out, new rookies, things like that, right? It's very exciting. First game, meaning nobody plays. Second game, they play a little bit. The third game is the one you want to watch, because by the 4th game, there's nothing going on. It's that third game.
Yeah. Well, he's very excited about the Hall of Fame game. That's the first preseason game of the season. Very excited.
Who plays in the Hall of Fame game this year?
I don't even know, but my son knows, and he's all excited about it.
Sure he does. All right, guys. Football season's right around the corner. We are selling puts. General Mills GIS September 7250 puts for approximately $1.85. And hopefully we take our profits before the preseason starts. Thank you, Shawnee.
All right, my man. Talk to you later. Take care, everybody.